Welcome to the official Trade Talk channel where I teach you how to analyze price for the most consistent and higher probable entries to help you become a better trader. We're going to talk about what happened last week on Bitcoin, what's happened, well, when I say last week, I really mean this past week, and then what we can potentially look for moving on into next week, as this is Friday and I want to go ahead and get started on the video because I have stuff to do tomorrow and I won't be in the office. So with that being said, let's dive in. First and foremost, there was only two bullish signals on Bitcoin coming into this week. There was a near-term downtrend that got a breakout above, but it became really evident really quickly that downtrend was not going to produce any gains. And then the other bullish signal was this near-term 3-day outside candle, also known as a bullish engulfing. The first near-term bullish signal that we were looking at was going to be this little downtrend right here. Let me take off log scale. All right, so this downtrend coming in right here, this was one of the only two bullish signals that there were. You can see that once you broke out here, price did come back in for a retest. Now, this retest also coincided with the weekly open, which if you're new to the channel, welcome. If not, welcome back. But the subscribers that have been with me for a long time know that I put way more weight on my horizontal price points instead of trend lines. So you had 2 points of confluence there and you did get a bounce, but that bounce was then sold into. And once we got below the weekly open, then it started to look less likely that we were going to see a bullish bounce. We did in fact get a bullish bounce, but as you can see, that thing traded right up into 4-hour supply and was hammered right there. So price trades up, 4-hour supply comes into play, boom, boom, straight down. Took out this near-term wick to the downside here, and now you are seeing what looks like to become a little bit more of south side continuation. But let's get on to the other bullish signal before we move on to all the bearish signals. The other only bullish signal there was this 3-day bullish reversal signal, right? This 3-day bullish engulfing, or outside day, if you will. This candle here was your 3-day support zone, and we was waiting to see how this closed, above or below. It did close above, so our near-term signal was still looking for a little bit of a bullish bounce, but not expecting much, as it is in a downtrend, and bullish pops tend to get sold into in down trends. So you could see that price traded all the way up and tested your last 3-day candle session, tested that high. That is also where that 4-hour supply comes in, and then it was straight to the races, straight down. And you have had your range expansion to the downside. We're going to get back over here to the daily time frame so I can show you what the bearish signal was. The bearish signal was this daily downside candle. This downside candle is an outside day candle as well as a bearish engulfing. So this is a decent signal, especially if it occurs in a downtrend. That's why we were paying so much attention to it in last Saturday's video. What we wanted to see for continued bullishness, or from this bullish bounce, was a close above daily res at $43,920, and that did not happen. In fact, once you put in this day and reversed back to the open, you never even come close to getting above that level. And remember what I said last Saturday, you have to get a close above that, and then you have to take out that candle's high if this is a trap to the downside. If this stays intact and that high stays intact, then this signal is still intact. Those were my exact words. So here you are. You have resistance here. This resistance held price. You did get a little bit of a higher close there, but it was so tiny, it wasn't even worth looking at. Then the very next day, you would get your breakdown. Now, you hadn't taken out 3-day support yet, but you did take out daily support, so we were leaning a little bit heavier on the fact that we were going to probably see downside continuation. You can see here that this was the support level on the 3-day that we were watching, and you did close back above. But it was one of those scenarios where it was like, I don't like it. right? I mean, it looks good, and I do expect a pullback or a bounce from this area, but I'm just not liking what I'm seeing, because when you break out, when you get that breakout price action, you typically will see a breakout candle, price come in on a retest, a very shallow retest, another massive expansion to the upside. That's because there was so much liquidity in that bullish pop. We didn't get that. Instead, what we did is we traded up in the 4-hour supply and reversed to the downside. So here we are. Now on this push lower, we did take out this near-term target for now. You can see this thing pretty much took out most of the targets. There is still this wick to go. So I am not going to be looking for any bullish bounces until we take out that wick to the downside. There is also your last daily support here, and you can currently see how price is reacting to that daily support. This is what I'm looking for, though. I do believe that this is not going to hold. I mean, it may hold as far as with a daily close, but I am looking for this target to be hit. Once we get this target, then I'll be more amped to potentially look for bullish entries or looking for a near-term bullish pop. You can see here that we are oversold. On your daily, you do not have any bullish divergence either. That's another thing to keep in mind, as you don't typically want to start looking for bullish entries until you do have bullish divergence. You can see over here, let me shrink the chart a little bit. You can see over here when we had the B word podcast, you see how this low was higher than the capitulation wick to the downside. So this price made a lower low, but the oscillator made a higher low. So that is why we were more apt to take bullish positions up into there. And also we were looking for price to trade up into the 618 retracement of your main decline, and price did that. And we did nail that short side entry as well. So we're going to be looking for something similar. I think if you do close above this today and then trade up into, yesterday's low, or not yesterday's lows, but these lows over here, maybe find near-term resistance, and then you get that next push lower and take out that 37,300 level. That will probably then give you a little bit of bullish divergence. Then we can start looking for near-term pops in price, but nothing epic. We're not looking for a new all-time high. When that occurs, we're only looking to trade the bullish momentum coming out of this area. Now that wick does not have to get tested. You can see that you are holding here. So I leave that up to you to make that decision if you want to try to take a long here. But I can tell you one thing, anybody that's tried to pick a bottom since this low, since these lows, since this low, since this low, and since this low, they've all been stopped out every single time. So every single person that has tried to buy the dip on this downtrend has gotten wrecked. And that's usually what happens in bearish markets, because the trade isn't to buy the dip. The trade is typically sell the rip. So we're only going to look to position ourselves longs for that rip to then find resistance and then get short again. All right. So that's how we're going to trade it moving forward. Let's go out here to the monthly. I'm not going to show you every time frame, because in this, once you've done what you've done here, there is no point. I will discuss that you do have a monthly demand zone right there at 37,276 right here, which is why I think that wick low could be very important. That is also this wick low. Okay, so that wick low, what I was talking about triggering, that also puts you right into monthly demand. So we can just leave it there, as we know that it's monthly demand. So that's why I'm kind of looking for that to get touched first. Next monthly support zone is going to be $35,060. $35,060. You can also see on your RSI that you did have massive bearish divergence from this swing high to then have a new high on price, but a lower high on the oscillator. That has played out with this bearish move here. So you're not looking to take any more bearish entries. As you can see that your oscillator is starting to cool off, and it is starting to reach that epic point of where you generally will get a bounce. You can see here, last time you tested the monthly 50, RSI was on, you got it, the March 2020 sell-off. Yep, that's the last time you touched the 50 on the monthly. So that's another scenario there that just shows you that you are indeed in a bear market. So if you remember, I do put a lot more weight on my 2-week time frames than I do anything else when I am looking for those near-term moves to the downside. This was the support that we were looking for last Sunday's close. Last Sunday's close did indeed close below the 2-week support zone, and you can see that you did get a little bullish push and then boom, here we are. So that's why looking for these closes below support matters. If this would have closed above, then I wouldn't have been so skeptical about getting a bullish pop. But since we closed below, I was looking for a bullish pop, but in the back of my head, I knew that, you know, this closed below. So that's not good. You can see here on the RSI, you are indeed below the 50 on the 2-week. The weekly looks terrible. Let's see where we are on the weekly RSI. Just looks like bearish continuation. You have gotten a fresh weekly low on the oscillator, but that will only stay intact if this thing closes below support. If it trades all the way back up and turns green, which is highly unlikely, then this will more than likely tick up. But since today's Friday, I am suggesting that there is probably a good chance that you might get a bullish bounce up to and around this wick right here. And that's probably where you're going to find more resistance for then price to come down and touch that monthly demand zone. All right, so that's what we're going to be looking for. That's how we're going to play it. Just to reiterate, this is the wick that we are targeting now. You are at daily support, but that is the wick we are targeting right there. Once we get that test of that wick of that $37,300 area, then we can start to look to see if Bitcoin wants to bounce from here. We're only going to be playing it back up to old daily support where it broke down, as that is where we could potentially see more resistance, and that will be 41,565. So we'll see what happens. This was the point at which everybody thought Bitcoin was going to bounce. Bitcoin slapping people around like it always does, once again letting them know that he is the king of all assets and he will do what he wants to do. So we'll wait for this to play out before we'll start looking for long positions. I'm watching it on the near term hourly charts as well. If I find a support zone that I like, I might try to take a long scalp here and there, just scalping inside and out of the daily ranges, but I'm not looking for any macro turnarounds just yet until we take out that $37,300 level, $37,300 level, and I will only be looking for 41,565. As once we get to there, then anything can happen, right? So that's what we're looking for, traders. Make sure you guys trade safe out there. Make sure you are protecting your downside, please. Make sure you guys trade safe. Make sure you trade smart, and as always, happy trading, everybody.